You guys doing? Hope you're doing fine. This is almost an educational video of how to feel a gold's bottoming process. Since the start of the new bull market back in December 2015, gold has a character of bottoming and topping in every correction. And this is the beauty about gold. It's not hard it's not hard to analyze. It's simply. I think it's simple. If you stop listening to cheerleaders, people that I really I don't think I really don't want to say a negative thing about them. So let's not talk about them. Okay. So this is the chart for gold. This is from September 2016 till December 2016. Okay. And this after the presidential election 2016, and that was the bottom in December 23rd, almost 1 week after the Fed meeting. So what we see here, we see a low and consecutive lows right here. And if we look at the momentum indicators, this is higher lows. So what do we call that? We call that positive divergence. And the signal, what I call a disco combo, MACD, stochastic, RSI at the same time. And to me, I think the end of the correction is usually after a down leg, the first time you comfortably close over the 10-day moving average on the black. And this is the 20, the red, and the green is the 50. Okay? So this is for the bottom, late 2016, early 2017. Good deal. So after that, we look at the correction that ended in July 2017. You can see a bottom in the stochastic and a rising bottom, or a low, higher low, low, extremely lower low. And after that, we had a beautiful bull run that ended in September 2017. Then we had a severe correction. Sometimes I like cycles, but I don't want to rely on them, the monthly cycle and all this stuff. You could say usually the corrections last between 3 to 4 months. Up legs, sometimes 2, 3 months, 4 months. The up legs, they vary, but the corrections usually 3 to 4 months. Okay, good deal. So this is, so I covered 2017 early. And also the end of that bull leg, the first one was a negative divergence right here. And severe. And another one. See how negative divergences usually help you with gold? So you fight your FOMO and just follow the chart, and this gave you the bull run right here. And also the Japanese candles, you always be wary of indecisive candles like this one, definitely like this one. So it's a lot of things. It's not easy recipe. Okay, so after that, we had a severe correction that ended in December 2017, yet we didn't have any divergences for gold yet. GDX, we had that. Okay, this is GDX. And we want to look for, okay, see, this is a low, extremely low. You can see that. This is a low, higher low in stochastic. So that gave me an idea of the end of that correction. So positive divergence in GDX that helped me to predict what happened to gold. Good deal. Same thing happened after that bull run in late 2017, early 2018. We had consolidation for 4 months, yet we had negative divergence in the MACD, also in stochastic, also in RSI, and ended in tears after that. And we had a beautiful hammer, amazing hammer, where the hopes were gone at that time. People were talking about 900s. I remember that. It was almost 1150 something, 60 something, the low. Okay? Beautiful hammer. Yet there's no divergences. But if you look at GDX, you have a low, lower low, low, higher low, RSI low, higher low, MACD low, higher low. So you could use GDX to predict gold's movements sometimes. So 100% of the time you have positive divergence in every correction, either in gold or GDX. Okay, good deal. So we finished that correction that GDX predicted for gold, and we had another bull leg, another beautiful bull leg. When you have, it was really hard to, it was a harder bull leg at that time. But once you cleared the 10-day moving average, it was clear sailing. And after that, in late Feb 2019, you had an ugly indecisive candle with high, higher high. You have high in the stochastic and lower high right here. So what happened after that? A correction started. The correction ended in June 2019. We had stochastic low, higher low. Also in the RSI, same thing happened. So it's the same pattern. So you ride the 10-day moving average. And after that, you had a high, a high in September 2019. MACD a high, a lower high. Same thing is true for stochastic and RSI. Good deal. So we go after that. So we are right here now. So we had a correction, and same thing happened in December 2019. You have a low in stochastic, higher low, and higher low. And you have a low, an equal low in gold price action. Same thing with our RSI. So it's intact so far. And also that rally that started in December 2019 ended in almost March 2020. You had a high right here in RSI and lower high right here in the first down leg before the correction started. And this what happened. Then you have a higher high in price action, gold price action, yet that high was not confirmed stochastic. A high, lower high, RSI high, lower high, and bad things happened. And after that, you have a low, higher low. Yet that time, I really think this is not a normal condition at that time, during the time of COVID-19. So really, it's a blip. I'm not gonna even discuss it. I discussed it, but I really don't care about what happened because it was total chaos at that time. So we go to today. So today, we have the lows, lower low, and lower low. And we only starting now to go deep into oversold in stochastic on our side. So if history repeat itself, and also same thing in GDX, if history repeat itself, there is no bottom in sight. There is no positive divergence of any kind. in gold nor in GDX. And also, if you think about measured move today, you look at a busted flag right here. This is, I can use it. I can use my, okay, trend line. You can do it this way. Right here. And it's obvious that it's busted. So usually you have measured moves. You take this high to this low, and almost it equals to, I would say, in this level, 1650, the measured moves. So usually you would have a measured move. And this is always true with gold. You have measured moves that might tell you what might happen. And it is to be taken seriously. I really do think so. And we don't want just coincidence. We want to repeat the patterns. So if we are disciplined technicians, we're not gonna get into gold to at least you have 75% of the measure move. It doesn't have to be 1-to-1. Okay, so I'll be flexible. Okay, and so in conclusion, we are still under correction. There is no bottom in sight. We might have bounces, but according to the old behaviors, we might have lower low very soon. According to pattern recognitions, we have a busted symmetrical pattern in the weekly time frame, and the measure move it's going to be in the 1600s. So if we are disciplined technicians, we're not going to get in gold right now. Please like if you like, subscribe if you never subscribe, and remember please that disco is forever.